Good morning, everyone. I hope you're all doing well. It's another beautiful Tuesday morning. I'm not too sure where you are, but where we are, it's nice, it's lovely. Welcome to another edition of UKBF Talks with myself, Jacob Collins Brown. Today, we're going to be focusing on how to protect yourself in your business. And I am joined this morning by Adrian Benjamin.
Hey,
How are you
Jacob.
doing? How are you doing today?
I'm good, thank you. Thank you for having me.
No, it's a pleasure. It's a pleasure. We've got people joining us today on TikTok as well. So to all the TikTokers, just say good morning. So Adrian, before we normally have these conversations, I normally like to ask everyone what you've had for breakfast.
Okay, so today I'm trying to get back in shape, so I'm trying to eat healthily. So I had
Yeah,
Alpen, not really sexy, not Frosties or Cheerios, but Alpen, yeah.
Alpen.
Alpen, yeah. I'm
What's
trying to
what's
get
what's
Alpen's
what's Alpen?
it's like muesli.
Okay,
Yeah.
okay. So Adrian had muesli. What did I have this morning? I had Pringles.
Pringles.
Pringles and water, which is not the healthiest at all. But yeah, there's something that I'm sorting out with my convictions. Pringles
Okay,
and water.
what flavor was it?
It was Texas barbecue, the
Okay, that's
greatest
all
flavor
right.
of Pringles ever. So
Good. Good.
can't go wrong there. So we're gonna go straight into it. If you have any questions whatsoever during this conversation between myself and Adrian, do go ahead and put it into the chat, and we'll go ahead and pick those up later on um, during this conversation. So let's get straight into it. You ready, Adrian?
Ready.
Here we go. So I just want people to know who you are. Give us a bit of context, a bit of background about who you are, because for all we know, you could be an alien. So who are you?
Yeah, so me, originally from Manchester, accent has gone, so I moved around quite a bit. Went to university in Birmingham and did business studies. When I graduated, I was part of the Mountbatten internship where I did investment banking for UBS in 2009. So that was good to see that in real time, like the crash and how things are working. Came back to Manchester, did recruitment for a bit, and then I moved to Reading and worked for Royal Bank of Scotland. And then since then, I've moved to London and I've been a financial consultant for Accenture, Visa, Bloomberg, HSBC, and Deloitte. And kind of how I fell into doing insurances or wealth protection, all the projects that I worked on were all kind of related to business risk. So when I was working for HSBC, when the crash happened in 2007, 2009, the Financial Conduct Authority said we can't have investment bankers using general public retail bankers' money. So we basically had to create a brand new bank from scratch. So now when I speak to clients, it's all about financial risk and bits they might not necessarily think about.
Wow, what was during that time? Because I can imagine you've been through stuff where people have gone under, businesses have gone under. There's been various scares. For you, as somebody who helps people to protect their wealth and the different things that they should consider to protect their wealth, what was that like for you? What did it open up for you in terms of the opportunities for businesses, and what did you like? What sense did you get from around that time?
Yeah, I mean, good question. So I'm self-employed too, like many limited company directors or self-employed people. So it's more of I know exactly what you're going through, and you're trying to just make the business grow and profit, and protecting that always gets forgotten, which is understandable. But like I said, with my corporate career, always doing big multi-billion pound projects about risk, I can help the everyday person how to do it. And also, if you're a limited company director, life insurance or relevant life, it's an allowable business expense. So instead of you paying for the insurances personally, you can put it through the business and it's more tax efficient.
Mm, that's interesting to know. I'm sure that we'll come back on that as the conversation goes on. So, what is wealth protection? What does it entail, and how does it work?
Good question. So wealth protection, again, it's more, so health is wealth, and that's very cliche. But if you're not healthy, you can't work, you can't generate an income, you can't contribute to wealth. So getting yourself, fit and proper is the main thing. So with that, private medical is probably one of the pillars for that. If anything happens to you medically, you need to be seen straight away by, the best people. And then obviously building your wealth for your business, protecting your business, and then protecting your legacy for your business and your family. Again, I can help in all aspects of that as well. And then a little bit extra on top of that is wills and trusts, but I mainly specialize just in the insurance part of it.
And at what stage do you believe a business owner should consider protecting themselves and their money?
Great question. To be honest with you, straight at the beginning, because again, a lot of business owners are trying to make the business grow and focus on revenue. But if anything happens to you and you're not, financially protected, then it could be under the business. So, private sick pay. So that's called executive income protection if you're a limited company director. If you're really stressed or you've got anxiety or depression through work or anything else, as long as you have a GP's certificate, you can then get an income. And the reason why I'm specializing in business owners and self-employed, we're under so much stress through the business and making it work, and financially, where we will be continuing to work when we should actually be taking time off. So it's making business owners and limited company directors aware, like, look, I know you might hit a wall at some point due to stress, and you've still got bills to pay. Bills don't stop. If you have executive income protection, as long as you're off work and you've got a GP certificate, you can relax and try and get back to being 100%. And because I've been self-employed since 2016, I've been through when the government changed contracting rules, so IR35, I've been affected by that as well. So again, with my clients, I know exactly how they feel. I know exactly what they're going through. So they should have these things at the beginning, not when I'll put it off, or when I hit X amount of revenue, then I'll look at it. It should be at the very beginning.
Can you touch on there? With what you just said, is that basically the equivalent of, for example, if I worked for a company and I called in sick one day, I would be entitled to a level of, like, let's say, sick pay if it was for a length of time. Is that basically what you're saying there as well?
Yeah, if you're an employee, depending on your company, excuse me, yeah, you can be entitled to sick pay. But if you're a limited company director, you're self-employed, you don't have those benefits because it's all on you. So that's why at the very beginning, self-employed limited company directors should be having, income protection or executive income protection from day one, really.
And how often are these sorts of products reviewed, or should a business owner review what they're actually doing with these products?
It should be every year. So with my clients, I'll always check in. Again, I've got personal clients who are employees, that's fine also. But with the business, as it expands, it needs to be reviewed. So Jacob, if you had a business, a limited company, and you've got another director, so initially the insurance was just on you. If you've got another director, if anything was to happen, you were to pass away, your business partner, if your business partner was to pass away, their shares will go to their spouse, and then they can come in and make business decisions because they would have inherited the shares on death. So limited company directors should all definitely have shareholder protection, whereby if someone does pass away, they can buy the shares off their director's spouse, basically.
And these are like documents that when you're going through processes of like wealth protection, these are things that people should be privy to.
Yeah, but you're right. I mean, that's the thing with insurance. Again, it's not, people don't really understand it. It's got negative connotations. But because I've worked in the bank, we have a credit department. So the credit department, if you were to come to the bank, the credit department will basically do a background check on you, check your credit history, and assess why we should give you money. And then different members of the team will analyze your request for the money. So if corporates are checking everything, the everyday person should be doing it, basically. And also, again, I've come from a banking and consulting background. I had no idea about any of these insurance products. I had no idea about it. I had no idea what a trust was, all the business insurances that everyone needs. We just think of, indemnity, non-indemnity insurance, which you have to have. And then that's basically it. I'm like, well, you need to look after yourself. If you fall ill, you might need private medical insurance. If it's for a long amount of time you're out of work, you'll need executive income protection, which is private sick pay, or if it's even worse, you've got a critical illness such as like cancer, heart attack, and stroke. They're the main ones, and you're off work for quite a while, or you can't ever work again. You need to make sure your income is protected. So wealth is your ability to earn an income, basically.
Yeah.
And with me, there's different levels of that I can do with people. So we can do the short term, private medical income protection, medium, critical illness, you might be around for a little bit longer, but you're not too sure. And then the longer term, which is life insurance, which is, money going to either the business or your family, basically.
On that note, what is the difference between life insurance and wealth protection?
So wealth protection is a little bit more in depth, a little bit more comprehensive. So you could have a life insurance policy, but with wealth protection, for all my clients, I put it into trust. So by putting it into trust means you're not going to get inheritance tax. That's the first bit. And then it's also explains to the client what plans do they have for the family. So you might say you might have small children, and we'll say, okay, if you were to pass away, would you want them to go to certain schools? Would you want to go to university? Do you want to have a deposit for a property? That's like family planning. So that's a lot more in depth than just the average life insurance policy. And then we can also touch on wills and trusts, which is a little bit separate. But again, you need to speak to a specialist on that.
And this is interesting because like before we had this conversation, I would have coined the two of them together, but you're saying that there's a clear differentiation between the two things in regards to wills and trust. So when people, let's say, when someone's starting up in a business, I know that you've said that this is something that they should probably opt in for as soon as possible. But what if somebody starting out, the budget may not be there, or they may not have the finance to consider this? Why do you think it's important for this to be something mandatory that people take hold of?
Great question. Yeah, it kind of should be mandatory, but again, it isn't. And again, with your point of maybe a business or self-employed person can't afford it, I will make sure that we can find something to match a budget. So having some cover is better having no cover. So there's always ways around it. I've got clients where they want every product, but I'll say, I'd rather you get a couple and you're used to the direct debit, and then we can come and review it later on. Like, you don't have to have absolutely everything. It's got to be, a fit for you, because it is an expense. But again, if you're a limited company director, the business is paying for it, and it's a lot more tax efficient. So yeah, with your point as well before, we will review it every year, or you're looking to hire someone, you want to grow a team. Okay, maybe we'd need a group life policy for that as well. So whatever your needs and budget and how the business is, the insurance should reflect that. So you're right, it will be reviewed annually.
Yeah, and this probably leads me onto my next question. Why are you so personally passionate about creating awareness of this conversation and of this topic, especially for the business community?
Because I've fallen into it, and again, I've had a really good corporate career, and I had no idea what insurance was. My insurance that I had initially, it wasn't in trust. The advisor didn't tell me about it. So I'm thinking there's going to be thousands of people that don't know this, and I'm aware of it. Hence why I've been putting out videos every week about explaining what insurance is, so people can understand it. And also, coming from the bank, working for NatWest and RBS, there are a lot less retail banks now. Before you go into your retail bank, and they'll help you with a variety of things, or they'll introduce you to a mortgage broker or independent financial advisor. A lot of people don't have that. So that's why I'm putting out content on social media where anyone and everyone can access it in their own time. If they want to know more, then we can book in a consultation call. So just the way finance and the world it's changed now. And again, I've worked in a retail bank and understood, like, you've got your branch manager and you've got other product specialists. That's not there anymore. And two, if someone's like, let's say someone's 18, they're not going to have a branch manager there, so they're not going to have any idea about, I need insurance. They're just going to go on the internet, and sometimes with that, the people aren't qualified, with information isn't correct for that person. That's why people need a specialized wealth protection broker like myself.
Yeah, and what are some of the main concerns and misconceptions that people may have when it comes to life insurance and wealth protection that you've come across?
Yeah, some people think it's not for them. It's just for older people or for richer people, and it's for absolutely everyone. Some people feel it doesn't pay out. That's not true. All the providers that I work with on whole of market, that pretty much nearly 100% of it is going to pay out, unless it might be a position where someone hasn't medically disclosed something or they've lied. So the perception that it doesn't pay out or it's really expensive, and then I speak to clients and it's a lot more affordable than they think. It's just a perception of it, really.
Yeah. And what are some of the ultimate benefits from somebody that works in the industry? What are the pros of, as a business owner, if I was to take wealth protection straight from the bat, or in the mid-tier journey of my business growth, or at the end of my business journey? What are the pros that I can expect from utilizing this offering? So if we break it down to somebody starting off, and then somebody in the middle journey, and somebody nearer the end of their business journey. So we'll start off with the beginning of someone starting up. What are the pros and the benefits of doing that at such an early stage?
It will be cheaper for you because the younger you are, the cheaper the insurance is going to be, the healthier you are. So if someone's 18 and got great health, and someone's 50, 55 and got great health, it's going to be more expensive for the older person because they're more likely to pass away. So always get it done as young as possible. People will say, I'm fit and healthy, so I don't need it. That's the best time to get insurance because it's the most affordable. And I've had 2 cases where I've had clients and we've said, okay, let's move forward. And they've waited and a medical disclosure's come up. So I've had one client that's found out that they've got cancer. They can't get covered until we know the answers of that. And then another lady had issues with her blood and the price went up by 50%. So my point is, the quicker you get it done, the younger you get it done, the better it is. I'd rather it be a case. So let's say you said, look, Adrian, I want 100,000. That's the goal, but you come in and get 50. I'd rather you have 50 because you're medically underwritten and they've got your information, and you increase it later on, than wait and say, I'll come back next year when I've got more money, where anything can happen to you. And it's just going to cost you more in the long run if you don't do it. So it doesn't matter if you're at the beginning, middle, or the end, get it done as quickly as possible. And also the reason why we're working with, we're trying to have these businesses is to provide income for our family and a legacy. And by you not having these insurances, if anything was to happen to you, that's gone. Like once you have a certain medical condition, I've got a client now, he's got a stage of cancer. None of them are going to cover him until he's been in remission for at least 2 to 6 years. We don't know what that's going to look like. And he's young, he is healthy, but he's got a medical condition. And there's things that might come up in the future that you're unaware of. Like no one wakes up every day and thinks, oh, I'm going to get cancer today. It's unfortunate it happens. And, there's big awareness, there's marathons, everyone knows it's there and it's really big in the UK, 1 and 2 can have it. But then people won't have the insurance for something that they've got a 50% chance of getting. And that's going to really impact your business and also your personal life and your finances. So instead of being under that stress and duress, you've got this policy where, you've got a tax-free lump sum or an income where, you should really be focused on that time and getting better. That's why I tell clients, like, this is to make sure if the worst was to happen, you've got less stresses. So like I said before, bills don't stop. You're never going to get a break from like whatever bill it is, light bill, electricity bill, they're never going to end. So you don't want to be out of work and still trying to pay for all these things.
Yeah, I can just imagine that, like, when people are starting off in business, there is the glamour and the esteem of what they can achieve and what they can amount to, and the conversation we're having right now is something that they probably don't know is something that they may need to consider. So I think having these conversations and being aware of how to protect yourself and your business, especially through the wealth protection route, such as trusts and different things like that, are things that people need to be aware of. Hence why we're having this conversation. And also, the more understanding and the more value they're able to attain about the topic, the better the understanding they'll get. Which leads me on to this question. Why do you think there isn't much awareness about this particular conversation when it comes to the business circle.
You're just not thinking about that. You're just thinking about revenue. That's it. You're just trying to do as much as you can to make as much money. You're never going to think, oh, if I, let's say you've got a very physical job, so you're a builder, or I've got quite a few dentists. Now, if you break your hand, you can't work. Like, you're self-employed. So if you have a physical job, you definitely need it more than others, you know, and your ability to gain an income is wealth later down the line for your family, and you can't do that, then you're going to be in a difficult position. It's not a sexy topic. Like, I'm not going to be honest with you, Jacob, right? When I used to tell people what I did before, everyone wanted to know about New York, everyone wanted to know about investment banking. If I ever say insurance, everyone will ask boring, and conversation ends, right? When it's the opposite, where if anything happened, you're making sure, like, your business, your family, they're set for life. Like, that's what I do, and that's why I'm passionate about it, because I've experienced death recently, people close to me not being here, and the heartache and the difficulties in the aftermath, people don't worry about it. I'm still going through probate like 9 months afterwards. You still got to pay things, you still got to pay corporation tax, even though that person isn't here. It's a headache. And again, as humans, we just don't want to think about it. But unfortunately, that's the only guarantee in life, is you're going to pass at some point. We just don't know when. So if you know 100% something's going to happen, like, why wouldn't you prepare for it? When you get in the car, you don't expect to crash or have an accident, but we've been conditioned to buy car insurance, and we're conditioned to put our seatbelt. With our businesses, like, you want to make loads of money. Okay, if the worst was to happen, how can the business still, generate income? How can you still get an income if you're sick and you can't work? So to answer your question, I think it's just perception. Like, no one thinks about the worst. We're always thinking everything's going to hit and we're going to grow and get there. But reality is, things do crop up which we can't foresee. Hence why these products are there.
Yeah, we've got a question here from Natalie, and Natalie says, can you still get executive income protection if you only take dividends?
Ooh, good question. You should be able to, yeah. Because dividend is a source of income. Sorry. So I know with limited company directors as well, because I've been a limited company director. You might be getting, I don't know, £800 or £1,200 a month in salary. So salary is going to be quite low, but your dividend might be quite high, and you might be taking dividend either monthly, quarterly, or annually, or maybe in a couple of years. So that is a good question. You can use dividend as a way as proof of income.
Yeah. What are the other like benefits and tax benefits from utilizing going down this route?
Great question. So a lot of self-employed people, limited company directors, you'll put your petrol through, you'll put your car through, your phone, your mobile, your laptop as an allowable business expense. This is the same thing. Like, it's allowable business expense. So for example, if you're paying, I don't know, £100 a month, that's £1,200 for the year. That's £1,200 for the year is an allowable business expense. But if you didn't do that and you did it in your personal name, after you get paid, you're paying it again. So that's why I'm focused on the business community. It makes sense to just put it through the business, and your accountant, is going to be aware of that also.
Yeah, no, that's very useful to know. If you do have any more questions, go ahead and put it into the chat. Whilst we've got Adrian, the expert in this area, will go ahead and get as much value and insight from this as well. So I'm going to be that guy to ask this question, Adrian.
Right.
Forgive me. A lot of people, they at times get a bit edgy about this conversation, especially when they may be approached by somebody, because people just see, oh, you're just trying to get this from me because you want to get your pay or whatever. But what are if any, what cons or what downsides may there be about life insurance or wealth protection, especially for a business owner or someone starting up?
I think, again, it's perception, because we aren't aware or educated on what this product or industry is. We just, again, assume the worst. Like, oh, it doesn't pay out. And it could be a case of you might have gone on a website and it's an insurance provider you've never heard of, and you've not filled in the application properly, and that's why it's not paid out. Or they group I don't know, home insurance or car insurance, same as life insurance. It's completely different. The providers that I work with are the biggest in the UK, so it's not going to be someone you've never heard of. Yeah, it's just mainly mindset, to be honest. Or someone's had a bad experience, and I'll ask the question, okay, what was that? Oh, well, they didn't pay my contents insurance. I was like, well, I don't do that. You know, they just assume all insurance is one thing, and it's not. And especially for the business community, we have products that are specifically tailored to you. So with that income protection, which is your own private sick pay or furlough scheme, if you have a limited company, you can get 80% what you earn. General public is 60%. So just by having a limited company, you're entitled to 20% more income when you're out of work. That's massive. That's a massive positive. And again, until I came into this industry, I had no idea what that was. I didn't know what executive protection is. And again, if you're putting it through the business is going to be a lot more tax efficient, which is what every business owner should want, right? That's what you should be wanting. That's why you're working so hard, and you make sure it's right. So, you know, I've got a tool where I can go on it and put in where if you pay it in your personal name, you're not getting the tax benefits of it. So the same product put through the business is 50% cheaper. It's going to look the same on paper, but on the back end, it's a lot more efficient.
Yeah, we've got oh, Natalie's come back again. Do you want to put that question on the screen so that Adrian can see it as well? The second comment. Can you see that, Adrian?
Yeah, I can see it. Okay, she's asking how it's calculated. So whatever you earn with salary and dividend, you can get 80% of that. So if you couldn't work for a period of time, and to be the most comprehensive, let's say worst case scenario, right? You get hit by a bus, you can never ever work again. Income protection will give you an income until the age of, let's say, 67 or 70. That's massive. That, you know, you can't physically, you're not able to work, but you're still getting an income. That's the power of it. And again, everyone here is probably going to be self-employed, where you don't have, you know, a furlough scheme, you don't get statutory sick pay. You're by yourself. To answer your question, you can get up to 80%. We just need proof of salary and dividend, or like a P60, basically. But we do need proof of your income for these products.
Yeah. Do you want to go ahead and put that Natalie's last comment as well? Because I think Natalie was expressing that she's asking for herself.
Also, an employed child, so better the dividend. Oh, okay. With that, you've already got an employed job. If she, let's say, I don't know how much she earns with the second job, because it might be a case of her net profit might not be enough to be able to get this product. So for that, I'd have to understand what she earns and how that works.
Okay. Well, we're going to have some information about Adrian going out after this webinar. So, Natalie, if you did register to be a viewer of this or a listener of this webinar, Adrian's information will be in there for you to hopefully get in contact and have a conversation with him as well. But yeah, so what are the actual products? Because I just thought that assuming life insurance and like you're talking about, there's different elements within the wealth protection. What other products are there that people need to be aware of, or people can take away from this? Like you're just talking about the income protection. What else is there? And can you go into detail about some of these things that business owners need to be aware of?
Yeah, so one that I kind of touched on before is shareholder protection. So if you have a limited company with 2 or more directors, so let's say Jacob, you've got a limited company, your business partner unfortunately passes away, their shares in the business go to their spouse on death. Their spouse could technically come in and make business decisions because they own 50% of it. Or, you know, worst case scenario, they could sell their share to a competitor and then you're kind of stuck. But by having a shareholder protection agreement in place, you're basically saying when someone passes away, you've got the option to buy the shares off their spouse and retain 100% of the business. So that's really important depending on how big your business is. There's a product called key person insurance. So that doesn't have to be you or your business partner. You might have a really great salesperson. You could have a tech person, anyone that contributes to the profits of the business. If they were to pass away or be on long-term sick, that impacts the business. So let's say you've got a tech person, for example, and and it's helping the business grow, and that person is difficult to replace, that's going to impact the business. So the business would get basically a payout while that person is off sick or if they pass away. So that means the business is protected with the key person. Debt. So a lot of limited company directors might have a residential mortgage and they might have a personal guarantee on there. If you're a business owner and you've got a personal guarantee on your residential address, then you need to get insurance on it. Because again, if the business doesn't work, it defaults, the lender can take the property off you. That's really important. And again, the main one, income protection, any reason why you can't work. So it could be a dodgy back. So again, if you're a builder, plumber, electrician, dentist, anything physical, you break your hand, you can't earn income. People will just say, oh, I've got savings. But with the cost of living going up and up and up, it's going to be very difficult. Once your savings are gone, that's it. These products are there so you don't dip into your savings.
Yeah, that's really, really good to know. And once again, people, you talked about the preconceptions about insurance, life insurance. I personally didn't even know about all these other different elements attached to it. So it's very useful information for people to be aware of and to be able to make a good decision about what they actually want to do from it. Yeah, if you have any more questions, please go ahead. Do you have any questions on LinkedIn, Instagram, anything like that? Facebook? That's fine. Anything else that you want to basically disclose or share before we round up this conversation?
Yeah, I think insurance is unique to each individual. So you could have an identical twin and your insurance policies will be completely different. A lot of people think, oh, my friend's got this, or it should be £50. Everyone's completely different. So until you have the call, you're not going to know.
Yeah. So it's a unique scenario, which is something that people need to take on board themselves. In terms of when people are able to get hold of you, Adrian, are there any materials that you can? No problem. Want to put me on the screen, Jeremiah? So we're going to, if you have any further questions that you would like to send through, do send them through to us and we will pass them over to Adrian. Adrian's information will be sent out as well following this webinar. So if you'd like to get in contact with him, get hold of him, you can go ahead and do that. But thank you all for joining us this morning on UKBF Talks.
Oh,
I
sorry,
hope you found this conversation. Oh, Adrian's back. I hope that you found this conversation very useful. I'm going to. Is it Adrian ready to come back on?
Yeah. Sorry about that. I think I literally had a frog in my throat. Sorry about that.
Yeah, it's all right. It's all right. I was going to say before we round up, do you have any other closing remarks?
Yeah. So I think you've got my Calendly link if anyone wants to book a consultation call. Yeah, let's just have a chat. Like you're going to gain something from the call. So yeah.
Yeah, that's great. Thank you very much for your time this morning, Adrian. And if anything was for me that came from this conversation was that we cannot have a closed mindset, or we cannot have we can't put our back against the wall or put our guards up when it comes to this area of running a business, because like you said, something that's going to happen is one day we'll come in, one day we'll go out. So it's definitely something that we need to be aware of. And the more insight we get about this particular area, the more valuable for us it will be, and the cheaper it will be as well, especially with the different strands of protection for your income, sickness, shareholders as well. So thank you very much for the insight that you brought to the table and to the community this morning.
Thank you for having me. Appreciate it.
Thank you. Have a great day, guys. We will see you on our next conversation in 2 weeks' time. So do stay in touch. Do stay tuned. Check out the Grow podcast, which is a podcast where I speak to business experts, just as Adrian, and I focus on the different elements of business that we need to be focusing on to grow our businesses. The last conversation I had was with Hannah Brady, and we focused on branding and marketing and what you need to be focusing on within branding and marketing to take what you're doing to another level. The latest episode comes out tomorrow where I speak to David Frosham. David Frosham is an investment guru. He's run hedge funds himself. He's currently sitting on boards that give advice to different people and boutiques about what they need to be doing with their money. So this is an insightful conversation that you can gain on how to prepare yourself for investment and the sort of investment you need to be looking for, because not all investment works for what you're doing or works for where you want to go. So tune in tomorrow for Grow. Have a great day, guys.